July 4th weekend 2016 is upon us and the market has definitely changed. Find out what's going on coming up next. It's been a pretty wild spring, and we finally think we're starting to see a cooling off of the marketplace regarding Greater Boston real estate. Prior to Father's Day, maybe a week and a half or so, things started to cool down. Instead of seeing those bidding wars with 10 to 15, maybe even 30 offers in some circumstances, are now 1 to 5 offers. Buyers are frustrated with these increasing prices. Those prices aren't sustainable, and people kind of realize that. And we're not seeing people waive those home inspections anymore on single-family homes, which was unprecedented and sometimes ill-advised at times. And people have just said enough is enough. So we've definitely started to see it cooling off. Father's Day, obviously, the 4th of July, high school, college graduations, those also have an effect on the marketplace. It's just weird because we didn't see that last year. The spring market continued way through the summer and even through the fall. And that's been the case the past 2 years. So for it to cool off now, it's been interesting. It's not unusual, let's say, but it's kind of unexpected the way things have been going and a steady lack of inventory for some of these buyers. So the market's definitely cooled. And now let's talk about Brexit. England leaves the European Union. And if you look back to last August, there was a dip in our stock market. We lost a good chunk of change there. And that actually had effect on real estate as people got a little nervous and sales in September really slowed down. The Brexit's going to have a similar impact on the Greater Boston market in particular and nationwide as well, where we think people will kind of slow down and say, wait a second, what's going on? That's always been the case where people seem to panic and then the market corrects itself. So we anticipate that slowing things down too, coupled with some of the items we've just talked about. Now, this also has an interesting effect on interest rates. U.S. Treasury debt is pretty secure, so investors that normally invest in other markets are now coming to the U.S., and it's going to drive mortgage rates down even further, or has the potential to at least. So that's all these kind of factors are kind of coming together to make it so we have a cooling of the market from the seller's side. Now, as far as the buyers, you're going to finally start seeing some room to get properties under agreement. There's going to be no more of these bidding wars for at least the interim, where you now have an opportunity to get property after maybe struggling for a year and a half. So it's never a good or bad thing, it just is. And we'll see over the next month or so if the data backs up those trends. But predicting the real estate market, even with seasonal aspects, it's kind of like predicting the weather. So stay tuned and we'll try to update you as quickly as we can on what's going on. Thanks and have a good day.